Well, a good day, everybody, wherever you're joining or watching this webinar from. This is another edition of an EMEA AgTech Exchange. Today, we'll be learning more and having a great discussion with ALLIN. Next slide, please. So we'll have Suvankar Mishra, for the co-founder and CEO of ALLIN. And for those of you who don't know me, I'm Casey Harrison. I'm the director of impact and learning at Nuru International, but I also volunteer my time as the working group lead for the Agribusiness Market Ecosystem Alliance AgTech Working Group. And we've been putting on these webinars now for about 2 years. We also have been generating publications around innovative, disruptive, and appropriate use of technology in supporting farmer organization development. So next slide, please. And just a little bit more about the AgTech Working Group. For those of you who have, maybe it's your first time coming to the working group or to EMEA, there's a number of working groups at EMEA, but this one in particular is focused on promoting, and as I already noted, disruptive and appropriate technologies that increase farmer professionalism, incomes, and promote sustainable production. This year in 2022, we have two major priorities. One is to continue these exchanges in which we can learn more and have a conversation about ag tech and its relationship with farmer organization development, which is very much inclusive of the fintech space, and why ALLIN is a great partner to have presenting today. We're also designing and researching around the launch of a roadmap for farmer organizations, which is looking at what are the right bundles for digital tools for different segments of farmer organizations in a given country context. And if you're interested in learning more about that, please feel free to reach out. Next slide. And before we jump into the 15th AgTech Exchange with ALLIN, and Suvankar taking the lead on the presentation, I just want to also ask, if you're not presenting, including myself, I'm going to turn off my video just to manage the bandwidth. And if you have any questions, as Helena had mentioned in the chat already, please do share those throughout the presentation and we'll get to them towards the end, and hope for a really fruitful discussion. So with that, pass it over to you, Suvankar, and hear from you and ALLIN.
Great, thank you, Casey. Good day, good evening, morning, afternoon to whoever is joining from different parts of the world. Just a quick introduction. I'm Suvankar, CEO and co-founder with ALLIN, and joining me on today's webinar are my teammates. We've got Frank, I've got Wahid and Lavanya, whom I just admitted into the webinar room. So we've got 3 additional members other than me who would be happy to contribute when we get into the Q&A round or just conversation post the presentation. So just a quick check, Casey, am I audible? Am I audible to everybody?
You're audible for me and think it's good to go.
All right, great. All right, so to jump straight into the presentation of ALLIN, I think it's very important for me to present the context with which we've been working. And this context is not something which none of you would be aware of, but most of you, just to reiterate that in our experience, what we've seen is for a farmer, and this is an example of somebody from the hinterlands of northwestern Ghana who is getting ready to harvest a cocoa plantation, has got some serious challenges that she faces during the entire farming life cycle. And one of those challenges is definitely the climate-induced variables that are affecting the overall production of the cocoa beans. And just like that, one of these farmers faces a predicament where she is supposed to get access to medication to take care of a fungal infestation, but she's unable to get the right amount of cash to have the medication procured. So the choice that she has, and most of the farmers globally face that choice, is to either go for informal credit. And with this farmer, she doesn't have access to informal credit, so she has to delve deeper into getting access from the agro dealer, from whom she purchases the medication on credit and agrees to give away a fair share of her sales once the harvest has been sold in the market. Now, this predicament that I've laid out as a context is something that 9 out of 10 farmers globally do face on a regular basis. And for them, the choice comes down to it's better to have some income and give it away to informal lenders whenever they make money, instead of not having any money at all. Now, this comes down to one very important element, and I'm going to dive straight into it, which is 9 out of 10 farmers do not have access to the free cash flows. And what we mean by free cash flows is that these farmers should be able to have access to money to be able to cater to their needs for the farming products and services that they need to purchase throughout the production cycle, and also be able to get the money on time when they sell their produce in the market. There is a dilemma that these farmers are exposed to, and for us, our goal is to solve for this problem. Our goal is to unlock the free cash flows for the farmer. How do we do that is something that I will establish in the subsequent slides. But prior to that, what is it that we started doing as an intervention to solve for this problem? In the last 1 year, we went forth on a mission to first digitize the agricultural value chains. And starting with the Southeast Asian country of Philippines, working in West Africa between Nigeria and a small pilot in Ghana, we digitized the agriculture value chains, the farmers and the farmer networks of the farmer organizations that are part of this ecosystem. And we provided them access to knowledge, access to markets, and insights and intelligence to unlock access to financing. Now, to delve a little bit deeper on how this entire ecosystem was set up, this is an overview which I would like to walk the audience through one by one. So right at the top, as you can see, is the agri ecosystem, is a farmer organization or a micro, small, medium enterprise that is an aggregate group of farmers that are pre-qualified to become part of the ALLIN ecosystem. Now, what does the ALLIN ecosystem do? The ALLIN ecosystem first goes ahead and digitizes these farmer organizations and gives them the right training and support so that they are able to manage their own network of agents who then use the smart mobile application. And right now, this mobile application is available on an Android smart device. The Android operating system is the one that they have to use as agents to then go ahead and engage with the farmers. Now, what does that engagement entail? That engagement essentially entails that this agent will use the mobile application, go out to the field, and start collecting data on the farmers and their farmland. That's about 36 data points that's collected right at the beginning so that we get to know who the farmer is, where the farm is, what was the income and expenses of the farmer in the last 2 cropping seasons or cropping years, what are the different assets this farmer has, does she have tools and equipments and other implements? So it gives a portfolio of the farmer right at the beginning. Now, this agent is also responsible to carry out a de-risk indexing of that farm. Now, what is the de-risk index? Now, at the same time, this agent is supposed to ask a few questions to the farmer, get their responses to those questions, which are largely closed-ended. And those questions then get mapped with 175 different variables at the back end that then spews out a score that can be weighed between 1 and 100. And that score classifies the farmer as a low risk, a medium risk, or even a high risk farmer. So what happens in this stage is we are able to assess that what is the risk this farmer is exposed to. And just like that, what is the composite risk index that this farmer organization is exposed to? We don't stop there. Once we understand that these are the risks that may cater to soil, that may cater to inefficient and ineffective crop planning activities, lack of access to finance, which is credit to purchase the right inputs. There is no insurance coverage, neither for the farmer as an individual, nor for the crop on the index insurance. And as far as it goes, even the access to markets for purchasing those input products and having a contract to sell that produce. Every single piece of that is seen as a risk for the farmer, and therefore it's also a risk for the farmer organization. What we then unlock after that is a series of farmer-specific recommendations that are broadcasted directly to the farmer using SMS and voice calls. And that's exactly what we did in the Philippines and in Nigeria as well. And also, the record log of all those interactions are kept on the agent device, because the agent is also the one who is interfacing with the farmers on a regular basis as defined by the farmer organization. Now, as you can see and understand, hopefully, that this template, once set within a farmer organization, allows the farmer organization to manage their ecosystem. It allows the agents to start using the mobile application to smartly engage with the farmers. And it starts creating a lot of data, which then goes back to two places. One, the data that is used for unlocking access to inputs so that they can purchase seeds, fertilizers, crop protection, tools and implements on rent. So all stakeholders can be made available, and they can just put in a request. That request gets fulfilled on the mobile application itself and aggregated at the farmer organization. Similarly, when the harvest is ready, the farmers are able to aggregate all of that at the agent level, and the agent is able to bring everything to the farmer organization level, who then has a contract with the final buyer to sell that produce, allowing all these interactions to have a digital record keeping of that entire interaction. Now, the most important part, once we had deployed this and understood that the digitization piece is pivotal to bring transparency, to allow traceability, and most importantly, to bring the intelligence of data for the ecosystem to start intervening with the farmers at the right time that's possible. Now, a year hence, what did we learn? What we learned was very important for us to then unlock the canvassing for the next step that we started taking with ALLIN. So the first thing that we understood is there are too many cooks that are spoiling the broth. And this can be segmented into two parts. One, there's so many AgTech companies that are trying to digitize the agriculture value chain. The USP is lost somewhere in between. And in the hunt for something that is uniquely sexy or uniquely unique, which is kind of redundant here, the funding that is made available to such AgTech institutions starts getting limited. And that is exactly what we have seen in West, East Africa, respectively, and also in parts of Asia that we have worked. And what that does is any digital ecosystem that is built by any AgTech company, for that matter of fact, even ALLIN, there is no guarantee that it's going to be sustained after the project period is over, or after a couple of years, or after the management of multilateral and bilateral agencies change. There are so many variables that are not under our control, and too many cooks in this ecosystem are generally not helping. The second learning that we acquired was largely on the digital agent side. Now, within a farmer organization, you can have field officers that are paid members within the farmer organization that have the responsibility to engage with the farmers. As long as that ecosystem exists, we are okay to digitize them, to train them, and to support them. But in disenfranchised farmer organizations, where there are no agents and we need to bring the agents up, train them, support them, and handle them in this process, what it starts doing for us is, what we noticed is that primarily in Africa, the agents are largely incentivized only for data collection and data acquisition. There is no notion of business generation. And this is something that we felt very deeply in the northeastern states of Nigeria where we worked, that there is no notion that I am here to work on behalf of the farmer and the farmer organization and streamline the business connect between these two stakeholders. And that in and of itself is not something that we as AgTech companies have the right bandwidth and budget, as well as the capacity and capability to do so. It brings us down to institutional capacity and institutional funding that needs to be made available to make sure that that important stakeholder in the ecosystem starts performing better in this equation. However, this problem is something that we didn't face in the Philippines or in India, because these markets are much better when it comes to having the agents to understand and also to work, and they are far ahead to what the countries in the African continent are. Now, the last learning was the economics of insight, or if I may say, the miseconomics of insight, because we thought very happily that this is the intelligence that's going to come out. It's going to do magic. We had conversations with more than 10 financial service providers, and to our dismay, what we understood is that the cost that they should be paying us for consuming the intelligence we are providing is something that they want to add to the cost of lending rate to the farmer, which begs a question for me is, are you really promoting financial inclusion, or are you really trying to exacerbate the cause of financial exclusion by hiding behind the veil of cost? So I think that important learning put together brought us to these two parts that was missing in our offering. We standalone digitizing a value chain, according to me and according to ALLIN, does not have any significance unless you give them something that you can control. This is a learning that was acquired in a very hard way, not only from the field, but also in verbatim from our clients and in-country partners, who said that in order to bring adoption and use of digital platforms, what is it that you're giving that can be a stickiness for these farmer organizations and farmers to continue to use you? Forget all the different freebies and all the things that the SaaS world and the platform as a service world does. The most important thing is that, are we bringing in the money at a cost that is at a lower level of lending rate and is risk adjusted and risk mitigated, which is innovative enough for farmers and farmer organizations to take that up? The answer to that is yes, which I will highlight in my subsequent slide. Now, to refresh, based on that 18 months of work that we've done since 2021, what we now summarized is, as the digital platform, will play a three-pronged role, right? First, we continue aggregating farmers and farmer networks within those farmer organizations so that the digital ledger of portfolios continues to be built in the manner that we have been able to do that successfully. Second, we continue to do the de-risk indexing for managing the risk exposure, which I highlighted in one of my previous slides. And that still allows us to qualify farmers and farmer organizations into low, medium, high risk category. And on the basis of that, we also understood that throughout the cropping cycle, our engine will be able to predict different events that are induced because of climate change and weather-based risks that will affect the overall yield and harvest of the farmer, and how we can intervene and broadcast those messages directly to the farmers or indirectly through the agent using the ALLIN mobile app. Now, once this was set, comes in the part of unlocking the value of financing. Now, within the financing part, our innovation is essentially a trifecta of what we offer. It could be centralized financing, where the system has the capability to produce invoices for pre-production and post-production transactions that any farmer has to do. Like, no farmer on this planet will be able to survive without trade. So bringing in the factors of either receivables financing, payables financing, and invoice factoring into the ecosystem that allows us, and I'll jump into the detail later on, that allows us to pay for the farmer organization and on behalf of the farmer, the money that is needed at the time that she needs that, and also at the moment that it is required for. The other part is, of course, the DeFi, the decentralized finance, where we bring in the blockchain-based promissory notes. And a promissory note is an unconditional promise to pay, where whosoever is the buyer in the entire ecosystem will be issuing the promissory note to us, and we will be settling the payments to the counterparty, again, allowing the money to flow in, freeing the cash flows for both the farmer and the farmer organization. And the third part is, of course, the blockchain-based carbon and ESG tokens, because the ALLIN engine, throughout the cropping cycle, once deployed with the farmer organization, is able to capture all the key performance indicators, such as what is the carbon sink that has gone in due to organic practices or regenerative practices? What is the carbon that has been saved from getting emitted due to proper practices followed by the farmer? Has the farmer actually followed that? We collect that feedback. We then corroborate that feedback using remote sensing to see whether the reality on the ground speaks the truth for itself. And on that basis, we create the metrics that allows us to also issue a newer version of tokens that rewards farmer organizations and their farmers for these sustainable activities. Now, I'll come into a little bit of detail on what this process is all about and how it works on the ground. As I had explained earlier, the digital part where we digitize the farmer organization, in our definition, we call them the Agri Consortium. So once the Agri Consortium or the farmer organization has been digitized by ALLIN, we bring in all the input companies, that's a pre-qualification requirement, and the buyers that need to be present in order to complete the trade transaction for a successful farming life cycle. Now, what we do over here, and this is the first leg of this life cycle, when it comes to the purchase of inputs, ALLIN engine would have gathered all the data on how many farmers need what kind of inputs and at what price. All of that creates a system generated purchase order, which is then released off to the agri input aggregator. And there could be one or there could be many agri input aggregators. So for example, in Kenya, for the potato value chain, we've got an Agrico, a Bayer, and a Hello Tractor. So there are three different input companies that are providing three different types of pre-production products. Now, just for the sake of simplicity, let's consider them as one. Now, there is just one agri input company where the system generates the purchasing or purchase order, and the agri input company then has to send the invoice to the farmer organization. That invoice, however, gets paid by us, and in that payment, the farmer organization issues an electronic note, and that electronic note is a promise that this agri consortium will pay within 60, 90, 120, 180, whatever the harvest period of that specific crop is, which is known to the system as well, that this agri consortium or farmer organization agrees to pay the lump sum face value that has been paid on their behalf by ALLIN. Now, here is an important part, because there is money being taken for production, but there is also income being generated when the production is ready to be harvested and sold to the buyers. It is at that point in time, we bring in the different buyers. Now, for example, again, quoting the example of Kenya, we've got partnerships with the National Potato Council of Kenya. For the potato value chain, we've got Viazi Kings and a couple of other private players that are interested in procuring potato from the 30,000 farmers that we'll be working with. Now, when this buyer comes in and expresses the interest and the contract to pay, to basically buy, what we do is right at the time when the quality has been checked and the shipment has been dropped off to the buyer, we release the money immediately to the agri consortium or the farmer organization. Again, what does that do is the farmers and the farmer organization is able to get the money immediately and doesn't have to burden the buyers in this equation. So what is the innovation that has been brought into in this two-pronged transaction? The first innovation is that the cost of production and the price at which the farmer organization will sell, the latter will always be greater than the former. The buyer is now being freed of the challenges of paying off the farmer organization immediately, and therefore their margins may just get eaten away because of other external factors such as fuel cost, logistics prices, and other externalities. What we let go of when we pay off the farmer organization is that the buyers will now issue an electronic note promising us that they will pay back ALLIN the face value of what we have settled with the farmer organization within 30, 45, 60, 75, up until 90 days. Now, in this entire ecosystem, what this has done is for a farmer and the farmer organization specifically, the negative liquidity that was in place throughout that entire cycle of the cropping season has been thrown away by us by bringing in the capital that is needed to make sure that the successful harvest happens at the time it needs to happen, and by settling this money with the respective stakeholders who will always be liable to pay at the end of the day, because when the time comes, they have to pay up based on all the data and all the legal contracts that has been set up in this ecosystem. That allows us to de-risk everybody in this ecosystem. So in summary, the farmer definitely gets the money to produce on time. The farmer receives the money at harvest on time, which, if we go back to our original goal, that is that we are able to free the farmer from the cash flows. And she's able to now generate more money rather than relying on informal credit or her own micro savings to meet the production requirement. And that allows us to create another avenue, which is beyond providing risk-adjusted and risk-mitigated low-cost financing for the production life cycle. We are also capturing all the data that drives income generation for the farmer. And because it's the all-in engine, that is a single engine that does all of the work, once it's deployed, we are able to unlock that value. Now, to speak a little bit more about how that value gets unlocked, I'll hand it over to my colleague, Wahid, who will talk about in the next few slides on how we are innovating and simplifying the data-driven income generation, be it on carbon as a specific example, and furthermore on ESG as we move forward. Wahid, over to you, please.
First things first, exceptional presentation, Subakar. Thank you for the opportunity to be here. Thank you to Subakar, thank you to the ALLIN team, and of course, thank you to Amia. My name is Wahid, I'm an advisor to ALLIN, advising them on their refi strategy. Before diving into the slide, I'm very keen to highlight the bigger picture. If you're a farmer or if you are a forest landowner, the key channels to generate income are limited to selling crops, selling livestock. In the case of a forest owner, limited to selling forest-based product, timber, and running ecotourism operations. Now there's a new channel, data-driven approach to unlock carbon financing. What is carbon financing? What are carbon credits? Carbon credits are transferable and tradable instruments certified and issued by independent carbon registries. They represent an emission reduction or removal of 1 metric ton of carbon dioxide equivalent. Simpler words, they represent emission reduction or removal of greenhouse gases. These are heat trapping gases that cause a wide range of negative results for the wider world that we live in. Now, to zoom in on the process of generating income through carbon credits, the traditional process and the current situation is challenging, it is complex, it is time consuming, and relatively more expensive. We broke down the process into 6 basic steps. And of course, this changes from one standard to another, but we try to standardize it as much as possible. You select a standard, you select a methodology, assuming that your project fits in with the pre-approved methodologies that this particular standard has. You then open a registry account with the particular standard setting body or the carbon registry. You get the project validated. You go through a process of monitoring, reporting, verifying. Finally, the registry checks the monitoring, reporting, and verification report. The auditors take their fee. The verification validation body that does step 4 and 5 for you also take their fee. Then the carbon credits are issued. Then you still have to pay brokers to sell these credits on your behalf. So when we looked at the process in the current situation, we realized that there are a lot of challenges, but with challenges come great opportunities. If we can move to the next slide, please. We broke it down into 3 key areas: data and eligibility. When we took the list of data requirements required to create what is known in the industry as a project design document, which is absolutely critical for your project to get listed with the registry, for you to develop a project, we realized that most of the landowners didn't understand a single one of these requirements. They were too technical in nature, and the reliance was very large on advisors and third-party intermediaries. And then there is another challenge. You see, a lot of landowners own small plots of land, and it's not just a matter of gathering data, it's a matter of being feasible and being eligible, i.e. meeting the eligibility threshold. This creates an opportunity to create a simple app, simple interface, for lack of a better word, to gather data, aggregate smallholder farmers to meet the eligibility threshold. Moving on to the project design document. It is expensive, it is time consuming, it is complex. There is an opportunity to create an automated platform that supports land stewards and owners to develop carbon projects and create project design documents quickly. We're talking about a few days rather than a few months. We're talking extremely affordable instead of extremely expensive. We're talking about limited upfront payments and more of a variable fee. We're talking about an easier process by just following a few steps on the app. Finally, the MRV process. Of course, the VBBs and the auditors are taking a large chunk of the carbon revenue that is being generated. And with all the innovation that is happening in the space, there is an opportunity to create an optimized and tech-enabled MRV process to reduce cost. So to sum it all up and to end on a very high note in terms of ALLIN's direction, we're very familiar with what's happening in the Web3 world. We are in touch with some of the largest players that are operating in this space. We understand their models, and majority of them are focusing either on the demand side, or when the ones that are focusing on the supply side are not working with the large standard setting bodies. They're creating their own carbon registries, they're creating their own systems and their own verification and validation methodologies. That creates a challenge with liquidity, and only time would tell how successful those models would be. With us, we're very keen to work closely with the established standard setting bodies and just reduce the complexity, reduce the time requirement, and get the uneligible projects eligible and unlock much needed, liquid, high quality certified carbon credits for them. Thank you very much.
Thank you, Wyatt, for that. Now to continue with the story, a theory of change is to keep everything within a snapshot. Yes,
there are a few questions coming in. Do you want to take that towards the end or address them as you go along?
Towards the end.
Okay,
better. Casey, is that fine?
Yeah, no, we'll have a nice conversation at the end, and we'll start with those questions in the chat. So yeah, keep on going.
Excellent, thank you. So just to put everything into context for everyone, the impact that we are focused on is three-pronged. One is economic inclusion by increasing positive cash flows for farmers and farming communities. The social inclusion, so that this free cash flows allows farmers within those communities to make independent choices to better their lives and livelihoods. And third is as stewards of their own farmland, which is one of the largest reservoirs for carbon sinks and carbon emissions prevention. They are rewarded and incentivized for that directly. Now, the only input that is required to reach that impact is just ALLIN, and you can see it's one system, one engine that has a multi-pronged effect by streamlining the data as the key output and making sure that all the stakeholders, right from the farmers to the farmer organizations, agri-input companies, buyers, and even the investors who are backing ALLIN with the money that is required for this ecosystem, are able to get their merit. And it's a win-win-win for all these stakeholders. Just a quick snapshot of how it's a win-win-win. For the farmer, I hope it's evidently clear on how we are able to bring in more cash flows into their lives and livelihoods. For an input company who was always exposed to paying for credit and having that credit exposure, will no longer have to do that. They get immediately paid once all the purchase orders through the ALLIN system has been generated by the farmer organization. The buyers, of course, don't have to have the pressure of paying off immediately because the prices always keep changing based on market volatility and other externalities. They get the comfort and breathing space, whilst we are able to take care of the payment immediately to the farmer organization and their respective farmers. And for investors, that are either the trade financiers or the ESG and climate financiers. They are able to earn a quick yield through the short-term financing and are also able to cater to a measurable impact that they can proudly announce everywhere through a data-driven metric given by us. Now, very quick market opportunity. I'm not going to stick to factuals that are well known to everybody. However, again, just to clearly converge that what we are attacking is the cash flow, the positive liquidity that the farmer should have, and that's our endeavor to unlock as much as possible. But what is important are the next couple of slides, which is for an average lending rate of 20% in the African continent, about 14% in South Asia and Southeast Asia. We firmly believe the traditional financing has very limited scope of solving this problem today. The predicament that is to be solved cannot be taken up by traditional financiers. It rather needs a space for innovative, systemic, and farmer organization-centric financing, which we learned it the hard way. And with that, what we've understood is that in the current market, there are a good number of farmer organizations that are classified as invisibles, bootstrappers, and commercials. And there are about 220,000 of them. And to help you understand what these three segments mean, take the example of a farmer producer organization in India. The invisibles will be the ones that have been just established less than a year ago. And their only objective is to take the advantage of subsidies and capital subvention that the government programs and policies are running in the country. So those invisibles definitely need a lot of institutional capacity building. And those are the ones that we do not reach out to at this point in time, unless AMIA members and other institutions that are building that capacity would require that for us to do. Now, the second category are bootstrappers who have been in presence for about more than a minimum of 3 years, have a certain standing of doing business, both on the input and the output side, and they're able to bring up at least a sense of pre-professionalism that is required for us to unlock the value of financing for them and their farmers. And the third category, of course, are the commercial farmers. As these three categories stand today, we're looking at about a 200 million total addressable farmer market that requires about $200 billion worth of annual financing regularly. Now, when I was speaking about farmer organizations, this is where we converge on what are these bootstrappers and what are these commercial farmer organizations and how are they qualified to even become part of the ALLIN ecosystem, using the 4P and 1F approach, which is people, partners, purpose, planet, and finance. What we provide is a composite overview of what that or who that farmer organization is before we can even qualify them for getting digitized and getting access to both finance and impact-driven income for their ecosystem. This is just a snapshot of what are the key variables that we capture. There is a more detailed pro forma that can be shared if need be as we move forward. But this is just to say that we've got a pretty set metric to allow this financing to move forward. Now, finally, where are we right now? As with the learnings that we've acquired in the last 12 to 18 months of our digital deployment, what we are gearing up towards is to now scale our work in Ghana in the cocoa value chain, reach out to about 110,000 farmers as the total market, alongside our partners, Solidaridad. We've got the WFP-run Farm to Market Alliance, which has about 150,000 farmers in total. But what we are doing is targeting a small subset of 32,000 farmers that will be producing Irish potato and connecting them to the entire ALLIN value chain. And of course, the India part is what we are beginning with women smallholder farmers that produce organic millets and other cereals that are meant for both domestic as well as for international markets. Now, to just sum it all up, before I leave it for the audience to initiate the interaction, I, both as a founder and CEO and having worked in the space for more than 10 years encompassing Fintech and AgTech, I'm a genuine believer in either go all in or don't go all in, right? Because what we've seen, or what I have seen, is mediocrity in solving the issues of farmer financing and development has exacerbated the very problem. that we are trying to solve. We're optimistic that at this stage, when we have envisaged on this mission to go all in, I hope that others will also come all in with us. And for the audience today, I think what we are going to leave, or rather discuss on today's session, is how we can seek better opportunities to build collaborations around getting access to pre-qualified farmer organizations, look at collaborations on how bio-linked ESG and refi goals can turn into a financing advantage for the farming ecosystem, and of course, the inclusive financiers whosoever would be part of the AMIA and the extended AMIA ecosystem with on how we can work together to give them the opportunity to earn attractive and risk-adjusted returns. So I'll stop here. Thank you, Casey. Thank you, AMIA team, for this opportunity. I'll hand it over back to you, Casey, for the next steps.
Yeah, thank you, Sivankar. That was an excellent presentation, and with a lot of detail, I think, for all of us to distill down for ourselves. I think we do have some questions that came up in the chat from Lakshmi, and I think we can just start there. I have a few of my own as well, and as we do with this, we have about 15 minutes to do a Q&A. If you would like to come off mute and ask your question verbally, please feel free. If your question sort of is formulated and you want to put it in the chat, please feel free to do that as well, and we'll make sure to get to it. But to jump right in, the first question for you, Sivankar, is what are the economies of scale that is required for ALLIN to work with respect to volume of commodity plus numbers of farmers engaged? And then there's a secondary question there, but I'll let you start there with that response.
Excellent. I actually will hand it over to Lavanya because she's been dealing with the operations side of things. So Lavanya, if you want to chime in, please do.
Hello, everyone. Hi, I'm Lavanya, and I'm based out of Hoboken, New Jersey, focused as the Chief Operating Officer for ALLIN. So very, very excited to be here, and really good question, Lakshmi. So what we've seen is essentially a typical sort of farmer organization, especially when you're talking about the bootstrapper and the commercial category, can be anywhere between 250 through around 5,000 to 10,000 farmers, right? So one example, which Sivankar mentioned around India, we're working with a set of 4,000 farmers, which is focused on the millet and rice value chains. So that is a range that we're looking at. Between 2,000 to 5,000 is a good range for us with respect to number of farmers. When we're talking about the criteria to filter in on a specific farm organization, we went through the 4 Ps and plus the E. That's essentially our assessment framework. We're looking at essentially using that framework to figure out what is the right set of organizations we want to seek as part of this venture. So that's a high level. The second question around that was how do we extend the money to the farmers, right? And the payments. We're using, right now, the money is disbursed directly to the Agri Consortium, but we also have really good partnerships right now that we're building with the likes of Umoja Labs, who actually extend blockchain-enabled mobile payments directly to the farmer. So we're able to leverage that network to actually directly pay the farmer using Umoja and other such existing players in the market. Hope that addresses the questions you had around the size and the payments.
Just one more point over here, Lakshmi, for the broader audience. So digitizing the agriculture value chain in the initial 12 to 18 months was paid off by bilateral and multilateral agencies. So therefore, we did go forward and integrate ourselves with the Nigerian payment processing providers. We're doing the same thing for Kenya as well. Now, moving forward, as I had mentioned, the funding is getting saturated, right? How do we make money in that is through the entire financing equation. And then we deploy the digital platform. Now for the mobile money or the e-wallets to get activated, this is where we now limit the farmer organization to do that, because as long as either we're getting paid for it by them directly or by somebody who is being a proxy, we do not unlock that entire value throughout that ecosystem because it costs money to do all those integrations. So as Lavanya pointed out, we transfer all the money directly to the bank account owned by the farmer organization. Let the farmer organization take care of all the income disbursement. Now to the next part of your question, which is how do we onboard all the service providers? Our modus operandi is very simple. We work, we've got our own country level teams that are responsible to work on different ecosystems. So for example, within Kenya again, the FTMA is the ecosystem that gives us access to farmers, then onboarding and meeting with different input companies that are either already a part of the FTMA system or they are completely new is something that we do as a part of the business development. Bringing in the National Potato Council of Kenya and the likes of Viazi Kings is also something that we do. So that's a service that we are happily supporting any farmer organization ecosystem. But if there is already a set of service providers that exist, we do not intervene or rather change the ecosystem. I hope it addresses both your questions, Lakshmi.
That's great. Thank you so much.
Great.
No, yeah, and thanks for diving into the details around how that agro-consortium sort of comes together in relationship to those multiple stakeholders and kind of leveraging existing stakeholder groups that exist either within a farm organization structure, or it sounded like from the presentation as well, around certain types of ESG certifications that are out there, depending on the commodity that we're speaking of. So I think that that's a really interesting area of engagement. It would be, if we had more time, and something that others might want to follow up with you on is sort of what's required to really gain that traction and buy-in when you're engaging with those different stakeholder groups. But feel free to respond to that, or we can always table that for another time.
So as I mentioned here, so the first two sides of this entire value chain. On the one side is the conduit to help us reach out to farmer organizations that are rather pre-qualified. They are standardized with a certain rating, are professionally either bootstrapping themselves or are commercial institutions. For us to unlock for their farming communities the value of working capital finance is the first priority. And on the other side, you've got crop value chain specific buyers, right? Who are the buyers who have actually taken a pledge to comply and align with sustainable supply chains that are transparent, traceable, child labor free, and there are other attributes and KPIs that they would like to monitor. Most of these buyers tend to just rely on a one-time monitoring and evaluation that they do by handing it over to an enumerating agency, and they collect all that information, happily publish it in the annual report and make their gala happen, right? The difference rather is for them, for somebody like a PepsiCo or a Diageo sitting in Europe or the US, they are able to now get more access to the level 3 and level 4 supply chain and the real-time data that will genuinely have an impact on what they are actually saying and claiming can be backed by truth. And not only that, that truth can either bring in premiums for the farmers in terms of good and fair prices for the production, or it could be additional incentives that they're giving away for the development of the community. And it's something that they know that they can directly give to farmer organizations rather than having to spawn off the money through different charities and other not-for-profits. Nothing against them, but again, why siphon off money through other channels when you can provide everything on the basis of data directly to the beneficiary and the farm organizations is what our objective will be.
No, and that makes a lot of sense. I think one of the ways I want to follow up on that point, though, obviously you've discussed and very, very clearly highlighted the stickiness or the incentive, which is the liquidity and the cash, right, for the farmer and farm organization to be involved. And the high level of liquidity that comes with that financing that you're pushing towards these farm organizations and farmers. I wonder if you could talk about, from your experience at ALLIN, what limitations might exist with remote sensing data alone, and then what role potentially that the agro consortium plays in helping with some of that verification, right? In terms of, there's only so much remote sensing can tell you without being able to visibly verify. I mean, we see this in the smallholder crop insurance sector all the time. There's issues with triggering events. just because a weather index tells you that the weather in this county was negative or led to a crop loss and there's a drought, doesn't necessarily mean that every farmer experienced that equally, and that ends up leading to a lack of trust in the system. So how have you guys dealt with that experience state, and what role does the Agro Consortium play in helping to maintain that trust over time, or the farm organization for that matter, from your experience, or these other stakeholders and actors within this system?
Fantastic question. So I think the best way to respond to that for the broader audience to understand this is divided into 3 levels. Why do we need the ground data? How do we get the ground data? And at what frequency do we get the ground data? Because that allows us to syndicate, or rather merge, with the remote sensing data to allow a higher level of accuracy in determining the truthfulness of that specific activity that needs to be done. And insurance aside, ours is a very, very specific case. Every farmer within a farming organization based on the crop value chain has to undergo X number of activities, and they are always fixed, right? From an agronomic perspective, it is vetted by our own agronomist and also the in-country agronomist for that crop value chain. You cannot produce any crop outside of those set activities that have been defined. Now, within those set activities, we divide those activities that will have the highest propensity of risk exposed due to changes in weather conditions, and the weather parameters are also fixed in accordance to that. Now, what we do is take those 6 weather parameters, take the crop, and take the data from the field, which is from the farmer organizations, and we start calibrating on a predictive model on what it's going to be like 5 days, 7 days, 14 days, and 30 days. Now, the point to note over here is the larger the date line or the timeline, lower the accuracy level. But as long as it remains between 7 and 14 days, the accuracy is more than 97% when it comes to the weather information that goes into understanding that weather activity number 3, which may be fertigation, activity number 6, which may be crop protection application, and activity number 9, which may be just doing the harvest. All these 3 have to change in the timeline because there is going to be heavy rainfall, or there is a propensity of a pest attack, which may happen. And that data needs to be ground truthed back from the agents or from the farmer organizations. Sorry. So with that, what we are able to establish is that the ground truthing that comes in and the predictive in the weather that we've been able to establish, we're able to qualify that when we triggered that broadcast to that farmer for activity number 2, 5, and 9 respectively, whether those activities actually were done, were changed, or didn't change at all. And bringing in that compliance is absolutely necessary so that nobody has to rely on remote sensing blindly. And that allows the farmer organization an incentive that they should do it well, because by doing it well, they and their farmers are going to get now rewarded. And that's the practice which needs to be set up by us. Now, we've not been doing it for years altogether. I'll be qualified to say that we are the champions in that. But yes, that's the vision. What we have seen is either you can choose one-off projects that will reward you, that will ensure you and your farmers at a one-time basis, or you can create a mechanism using the ALLIN engine where the farmer organizations continuously are ground vetting all the data, and they're giving you all of that information, and they're asking from you, hey, what happened to the money that was owed for this ESG metric or the carbon sinks that was able to get happen? And in that due process, you're actually training these farmers by using liquidity and income as a key incentive for them. And on the side of remote sensing and its technical applicability, I mean, remote sensing has changed in terms of both the number of bands it is now making itself available, and also the kind of spectrum it can cover. And that allows us to rely on stakeholders such as Planet Labs, who are one of the best in the industry. At this point in time, the only limitation, though, is that they cannot sense anything below the soil. And to determine carbon, we need Sentinel-2 and 2A and 2B data to sense everything beneath the soil, which is now made available through open source partnerships that we have developed either with NASA Harvest or with European Space Agency's publicly available data. There is privately and commercially available data as well that is expensive, but that definitely has an impact on making sure that we're able to get the right data points, ground truth it from the farmers and farmer organizations, and let them also reap the benefits, 80 to 90% of which goes back to them. And we just as a platform retain 10 to 20% of that is what that syndication makes it relevant. Does that answer your question, Casey?
Yeah, no, and thanks for pivoting into the source of that remote sensing data and speaking to Sentinel and Sentinel-2 data for the soil measurements and because soil carbon measurements, because I think that was another question I wanted us to have time to get into, but we're running out of time anyway. Lavanya, did you have something to add? Because I have one last question. I'm going to steal some working group meeting time, and then we'll finish up here and try to give people the time back.
Yeah, Casey, I was just going to add, connected to the ground data and the satellite data we're getting, right? How does that feed back into the engine? So the risk score that you all saw, which is the risk assessment of the farmer and the agri enterprise, is a dynamic score, right? So if they are compliant and they're basically following all those recommended practices, that risk score gets adjusted over a period of time. So in effect, it's in some form of a credit score that gets adjusted based on the compliance. Just wanted to highlight that, how that feeds back in as a loop.
No, thank you for that. And then one last question. I guess, Savankar, if you noted the segments, you noted the invisibles, the bootstrappers, and the commercial operations, the MSMEs. What would be a piece of advice or a recommendation you would give to AMEA members who work very much with this invisible group with a lot of our work? Many of us do, not all of us. We also have many of us who work with commercial and bootstrap or MSMEs in different project and programs we work in, but really speaking to the invisibles, those that can't really access the benefits from the ALLIN platform at this stage for all the reasons you laid out. What would be the recommendation you'd give to those of us who are trying to develop capacity that may exist or is nascent in these organizations? What would be the first thing that we should focus on so that they could gain access to a platform such as this? And what would be your recommendation?
I think that's you're putting me in a tough spot, but coming from the experience that I've had specifically in India, and definitely not being on the ground in Africa, so I will it'll be unjust for me to share that. But rather from Indian perspective, the biggest endeavor that one should look at when they are bringing the invisibles and the disenfranchised farmers into one collective unit is whether or not there is a buy-in from all of these farmers, or the agenda is to just leverage existing subsidies or capital subvention that is made available. Because having clarity in that will definitely spin the web towards a more sustainable ways of approaching the problem solving that these farmers face, rather than creating a band-aid subsidy-linked solutions. That is mostly what I've seen with 30% of the invisibles that are the farmer producer organizations in the country, and they're just stuck there. And this comes from our own experience that which is what I did in my past avatar, is I also set up a couple of these farmer organizations right from scratch myself, right? One of the reasons one of the things that we were able to do largely successfully was that we digitized that ecosystem right from the word get-go. It took us 3 years to reach to a point where 1,400 of those farmers would be able to come together, conjoin themselves together, and rely on a digital platform. But I think that is the amount of time that is definitely needed if the direction is correct and if the intent is to build rather than just to survive on subsidies and subventions. That is something which I would love to share as a feedback to the AMEA team.
I'm really glad you did. I mean, I'll do a poor job of summarizing in my own terms, but just from our experience at Nuru, and I think many of our discussions at AMEA, ownership over the business model and good leadership being tied to that for the farmer organization, and then bridging that digital divide early on, and really focusing on the skill sets and knowledge that are needed to engage with all these digital tools and platforms that are out there. Because if you don't understand how the system works, or even how you can engage with it as a farmer organization, how are you going to understand how you can benefit from it? So I think in a lot of ways that makes very practical sense. I really appreciate you taking on that question where I put you on the spot right at the end. So thank you for that. I appreciate it.
No problem.
We're out of time. We went over time a bit, so thank you everyone else who's here and hung on with us. And as always, I mean, it is July, and many of our European colleagues might be on leave at this time of year, so I apologize if it's a smaller audience live than we've had, but I really appreciate the discussion and the engagement from you all at the ALLIN team. This recording will be available, so please do share, and we will do the same at EMEA and across our own networks because we are a network at EMEA, so all of our organizations like Nuru and others that are represented, we'll make sure to share this across social media too, and I really appreciate the time spent. Sivankar, thank you so much for all the effort to put this together with us.
No, thank you, Casey. Thank you, everybody. Appreciate it.
Yeah.
Thank
Okay,
you.
well, with that, we can stop the recording and we'll go from there.